Earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Zico. Good morning, everyone. On behalf of Elara Securities, welcome you all for the Q1FY24 conference call of Bharat Electronics Limited. I take this opportunity to welcome the management of Bharat Electronics, represented by Shri Bhanu Prakash Srivastava, Chairman and Managing Director, Shri Damodar Bhattad, Director of Finance and CFO, Mr. Srinivas, Company Secretary, along with their team members. We will begin the call with a brief overview by the management, followed by Q&A session. I'll now hand the call to Srinivas, sir, for his opening remarks. Over to you, sir.
Thank you, Mr. Harish. I would request our CMD, sir, to kindly make the opening remarks.
Good morning to all of you. Bharat Electronics Board of Directors has approved the Q1 results yesterday evening. We have turnover has been increased to 3,447 crores, which is 12.51% higher than previous quarter's figure of 3,064. There has been significant increase in PBT, PAT, EBITDA and earning per shares and other financial performance. Our order book position is 65,356 crores. Prospects are looking good. Results are available on our site. So we welcome the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Amit Dixit from ICICI Securities. Please go ahead with your question.
Hi. Good morning, everyone, and congratulations for a great set of numbers, sir. I have a couple of questions. The first one is essentially on the order inflow that we can expect during the year. Now, the year started with a bang for you with the order inflow of roughly 8,090 crores. In Q1FY24. Going ahead, I believe there are orders for, fuses for Indian Army, 4,500 crores, apart from some other platforms. So if you can just highlight, whether the number that you guided last time, 20,000 crores, that is still remains, or there is a chance that it will be exceeded?
No, we hold by order inflow in this financial year around 20,000 crores. And any significant change, if it happens in future, we'll let you know. But as of now, we are confident that we'll be able to receive 20,000 crores plus order.
Okay. So any idea, sir, when we will be getting this long-term fuse requirement from Indian Army and some, if you can just let us know that for apart from this fuse order, other Swati radar and all, when these orders will come?
See, this is fuse PNC is concluded, and then the process under MOD. So it takes its own time. So we'll come to know when order is approved and we sign the contract.
So 6 months from now, or it would be like in next
The MOU process is such that internal file movement we cannot track and we cannot tell.
At present, we can tell maximum it will be 6 months. What we anticipate is maximum is 6 months within which it should come. That is the maximum period we are expecting it.
Okay, sir. I have other questions. I'll come back in the queue. Thank you and all the best.
Thank you. Our next question is from the line of Harshit Patel from Equirus Securities. Please go ahead with your question.
Thank you very much for the opportunity, sir. Sir, my first question is on our content that we provide in light utility helicopter and light combat helicopters, because I think these two platforms are going to be produced in bulk and therefore will be a recurring revenue stream for us. So what are the systems that we provide to HAL for these platforms, and what would be its share in the overall value of a helicopter?
See, we are still in discussion with HAL. So at this point of time, it is premature to give you figures. But once we move ahead, we'll let you know.
Sure, sir. But then in ALH Dhruv, I think we would be supplying quite a lot of avionics products. So if you can elaborate, so we can take a cue from that as to what we will be providing.
I told you at this point of time, see, all discussions happen. Unless we move ahead and then travel some distance, it's premature at this stage.
No problem, sir. So my second question is just from the question of the earlier participant. If you can highlight 4-5 large orders, those are in the pipeline where the CNC process is going on, where the AON process is going on, and these orders would be realized probably next 1 year's time. So if you can give that pipeline, it will be very helpful.
Yes, as I told, one is that fuses. Then orders in pipeline are electronic warfare for ship-based system, around 1,000 crore plus, roughly 1,000 crore 500. Then around 6,000 crore plus are Bayer-nominated equipment, which we will get from various NGOTV and other vessels, where that MOD has placed the order at March end to GRSC, GSL, then Larsen & Toubro, then Fleet, which are also likely, this HSL is also likely to get. So around 6,000 crores will come from that. So 8,100 plus we have already got. So major, if you see 6,000, 1,500, and then 4,500 in range. So it reaches near 20,000. Then small orders, spare orders, small equipment, something, it keeps on coming.
Understood, sir. Thank you very much for answering my questions, and all the best.
Thank you. Our next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks for the opportunity. I have two questions. Can you give us
sorry to interrupt, Mr. Kishore. May we request you to use your handset as you're not audible? Thank you.
Yeah, am I audible now?
Yes, sir. This is a little better.
I have two questions. So one is, if you could give us some sort of update on.
I think there is some problem background-wise.
Sure.
You are not very much.
Can you give us a sense on what is the status on big ticket prospects like QRSAM and MRSAM, which you mentioned could get awarded over a FY25 timeframe? What is the progress around these two large contracts?
The QRSAM's trial reports and all has been submitted by to armed forces, and we have given some rough order of magnitude pricing also. What will be the likely pricing based on the likely configuration on which they are working. So post that, now they will be working on that AON pricing and AON proposal, statement of case and all. So that will go through.
Okay. So is it reasonable to expect that this can come over a FY25 timeframe?
Yes, it is reasonable as of now.
And this will be like a 15,000 crore kind of a contract in terms of ticket size?
It's difficult to say exact value. Yes, it depends upon how many regiments Army takes. But yes, let us see. But what you say that in public domain, and I can say reasonable, because
Yes.
these are the figures. It exactly depends upon what configuration, what item, what they want to take. So it keeps on changing.
Yeah. And
But
is there anything separate on?
As of now. Yeah.
Yeah. And anything separately on MRSAM or?
MRSAM also some discussions are there, but it's initial discussion stage only.
Okay. So QRSAM is much ahead of MRSAM in terms of progress.
It looks like.
Okay. And the second question is on the receivable position and cash equivalents as of June 2023, if you could give us an update.
Receivables position is around 7,000 crores. It remains around the same levels as of March here. And cash position is also reasonably good. As you know, half-yearly we do not disclose the balance sheet assets, but cash position is also reasonably good. There are good inflows. There are no budgetary constraints. So we are maintaining the same receivables, and cash position is also good.
Okay. Finally, sir, last year you had mentioned that there was some spillover of revenue from fourth quarter of FY22 to first quarter of FY23 because of some semiconductor shortage related issues which had impeded revenue booking in fourth quarter of FY22. Despite that, we see that there has been a 13% top line growth on the Q1 base of last year. So that's very strong execution, I would think. So you would say you are well on track to achieve your 17% growth guidance for the year?
Yes. We are well on track.
Sorry to interrupt. Mr. Sumit Kishore, may we request you to rejoin the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Our next question is from the line of Charanjit Singh from DSP. Please go ahead.
Hello, sir. Thanks for the opportunity and congratulations on good set of numbers. So, sir, my first question is regarding the non-defense sector or the civilian sector. So, what are the kind of opportunities you are seeing there? And we had done a lot of work in terms of airport security control and metro-related work. When can we see the ordering starting from that particular segment? That's my first question.
Last time also, I told that this takes time. So metro segments like IATS, we have already delivered one system. It is in operations. So now when future metros and wherever they are going to upgrade, there is an opportunity. Similarly, on other products of metro where we are working, like developing CBTC and Super SCADA and simulators and all, it will come in phased manner. And related business opportunities are also coming. But in my opinion, significant business, it may take 1 to 2 years minimum, where it will be impactful, what you say that revenue opportunity will be there in this segment. Similarly, in civil aviation also, we are working with AI. So there also development and trial stage. So there also, after maybe 1 or 2 years, you will see significant.
In all these things, it's still the initial stages. So definitely it may take at least a couple of years to get some materialization on this.
But we are right on track, sir. We are right on track.
Okay. And sir, in terms of the exports, are we seeing any further incremental opportunities coming for us? And we understand that there have been targets given for the defense PSUs to scale up exports in next 2 years significantly. If you can touch upon that part, and how is this pipeline building up?
So you are absolutely right. Government is very aggressive in export, and we are working closely with MOD to increase our export, and that's why a lot of interaction discussions are going on with our friendly countries and target markets. We are in touch with our defense attaches. Our foreign officers also are working. We are giving them details. We are meeting them. So process is on. And that's why if you see in this year, we are targeting a much better export value than what we targeted last year, around $90 million. Last year we did around $46.8 million. So this year $90 million, and then significant increase we will keep on achieving.
Okay, but what sort of opportunities, sir, we are seeing? If you can, give any further details in terms of
in these defense contracts, opportunities, our product range, so it will be in the same range also. But once it is finalized, because there are other global players also who are targeting the same market. So it is not proper for me to divulge that product details are on areas where we are working with them. Once we get the order, we'll share with you.
Okay. And sir, just lastly, in the past, you had also shared about, our area of, focus in terms of SaaS, and we trying to scale up in that segment. So any further,
software.
Yes,
software. Yes.
Software service. So any update on that?
Software service we are scaling up. As you are aware, we have opened a software center in Visakhapatnam also. But our major software contribution is towards our own offering to defense forces. So that we can add value which can improve our profitability. Outside also we are leveraging, but outside other area, unless we are very strong on our own core competency and for services, other areas will wait for some time.
Internal development is also helping us a lot because our internal software group does the thing for the equipments group. That helps us a lot in maintaining our margins also.
Right, sir. So thanks a lot for taking my questions. All the best for the future. Thank you.
Thank you.
Thank you. Our next question is from the line of Sarjeet Yadav from Mount Intra Finance. Please go ahead with the question.
Good morning, sir. Congratulations for the good numbers. I want to know about the execution which you're looking at for during this financial year. We had an order book of 60,690 crores as on 31st March, and about 20,000 crore orders are expected during the. How much of these orders will we be able to execute? This is the first question. And second question is, we signed a large number of MOUs during last 1 year. Any of these MOUs you see converting into orders or any opportunity size?
We are right on track as we given a guidance of around 17% revenue growth, which translates to sales turnover of around 20,000 crore plus in this financial year. So we are on track because that is based on what order book we had on 1st of April. As of now, you are aware, 65,356 as on 30th June we had the order. So execution right on track based on the requirement of our customers, because it's not like all orders can be executed same time. It depends upon the terms and conditions of the contract, when it is required by customer, what are the conditions. Many new contracts, they involve first proving first the production model and then after only bulk supply. So taking into consideration all these requirements of contracts what we get, 17% growth, that's what we projected, amounting to 20,000 crore plus revenue this year, and we are right on track as far as execution is concerned. What was your second question?
My second question was that we signed a number of MOUs last year.
So MOU, it takes time to convert MOU into revenue generation. So we are working these most of the MOUs are in the base of co-development, working on different solutions. So it's a time-taking process. We are working on that. Impact of that will be really visible in next couple of years.
Okay, sir. Thank you very much, sir.
Thank you. Our next question is from the line of Dipen Vakil from InCred Equities. Please go ahead.
Thank you so much for the opportunity, and congratulations on a great set of numbers. So my first question is on the non-defense segment of our revenue. So how much is the contribution from the non-defense and specifically from the EVM and VPAT machines that are expected this year? And what kind of margin do we have in the non-defense segment?
See, non-defense sector, EVMs will be around 800 to 900 crores this year. I think
for the current quarter per se, the EVM, VPAT and defense, non-defense was in the ratio of 75-25 for the current quarter because we have sold more EVM, VPATs for the forthcoming elections. But for the year as a whole, the ratio would be around 80-85% in defense and around 15 to 20% in non-defense. It's around that range. 15 to 20%. 15% could be because of the EM we paid. 15% will be in non-defense. 15 and 85 in defense.
Okay, so from EVM and
I'm sorry to interrupt.
Margins are concerned, as you know, we don't disclose the segment-wise margins.
Mr. Dipen, may we request you to use your handset? Thank you.
So am I audible now?
Yes, sir. You sounded very muffled, sir. Thank you.
Okay. So, and the second thing is we ended FY23 on a strong cash balance. So, any capex or any capex guidance for this year?
Capex guidance remains at around 700 to 800 crores for the current year.
So, that is mainly maintenance capex or any growth capex?
No, growth capex is also there in that. Maintenance, of course, will be there. Some of the maintenance will also be there. And there are some growth capex. There are large infrastructures coming up. So it is a long-term growth, not that it will give growth in 1 or 2 years, because there are some buildings which are coming up, infrastructure development. All this will take some time to fructify. But obviously, it's a mix of both. Maintenance also and augmentation as well as fresh additions. Both are there.
Okay. Thank you so much, sir, for answering my questions, and all the best for FY24.
Thank you. Our next question is from the line of Jonas Putta from Birla Mutual Funds. Please go ahead.
Good morning, sir. Thank you for the opportunity. A couple of questions. Firstly, can you talk about the employee cost? Is there an element of actuarial revaluation that is...
Mr. Jonas, your line is not clear, sir. Could you please use your handset?
Is this better?
So could you say something, please?
Yeah. Am I audible now?
Yes, sir. Please.
Yeah, please.
Yeah. So on the employee cost, even on a Q1Q basis, there's some jump in the employee cost. So, if you can explain that. The second question was on, we made some large provisions in the last 2 quarters of FY23. Is there an element of write back that is expected in the current year, or do we expect further more provisions pertaining to that 1 or 2 projects that sort of led that? And the last question was on other income. Again, that's seen a spike. So does this also quarter include a dividend from subsidiary, if you can quantify that?
Yeah, on the first question, the employee benefit expense increased from 576 crores to 623 crores. It's a normal increase of dearness allowance and some contract labor, some extra contract labors have been put. So those sort of things. Nothing much on actuarial impact is there on this. So it's a just normal increase of around 8% in salaries. It's a normal increments, dearness allowance and other contract people joining. So it is on those things. As far as salary is concerned, not much actuarial impact is there in the first quarter. And as far as your second question was on provisions. Right. Provisions right back on the provisions made during the last 2 quarters of 22-23. There is not much right back as of now. We are taking up the cases, but the success will depend on in only the time to come. We'll be knowing how much success we are able to achieve in that manner. But as of now, there is no right back out of that. As of other income,
further creation of provisions is required, sir, for those projects that led to that provision.
Yes. Definitely, because as I was telling earlier also, once the things enter into a LD zone, then obviously it continues to be in the LD zone and we'll be incurring LDs on those projects which have already entered into LD zone, in which the execution is in the current financial year. Attempts are being made wherever possible that where we feel that we would be able to get it, but that takes some time. As of now, definitely there will be further provisions on that account. There's no doubt on that. And as far as other income is concerned, it's mainly, there's no interest in the income from subsidy this time, dividend income, except for some 2 crores last year or 78 crores. And it is mainly because of interest income has increased. Interest income this time it was 78 crores, now it is 132 crores. So because of the interest income increase, the other income has increased.
Got it. Thank you, sir. All the best.
Thank you.
Thank you. Our next question is from the line of Amit Mahawar from UBS. Please go ahead.
First is on the expansion that we are, doing on 6-7 locations across Pune, Bangalore, Nagpur, etc. If you see the capacity expansion, and also we are, maybe adding a lot of test, lines, so which has been a restraint for us in revenue building, etc. Do you think FY25, next 2-3 years, the revenue run rate can increase because of this? Because I think this year you're going to execute LRSAM completely and voting machines, etc. So does that call for much better revenue building in the next 2-3 years? That's my first question.
As you are aware, new electro-optics company is coming, building is coming in Nimaluru, EW systems for land-based EW equipment which is coming in Ibrahimpatnam, Nagpur for fuse complex. So major expansion in Hyderabad unit for microwave components. Yes, definitely this will help in execution of the project. As of now, what we see is revenue growth in the region of around 15-17% in next 2 years, depending upon what is the order in pipeline. Because all these orders are not executable in 1 year, even as per contract. So even if whether it is QRSAM or any other big ticket programs also come, their execution time is normally 3 to 4 years. LRSAM will be tapering off, then QRSAM will come. Akash will take off that what we got from BDL. So revenue growth will be in the same 15, 20, somewhere 17, 18. That's what it will be in that range. That will be.
Fair. And second and last question is on the prospect pipeline and the impact on order book. The last 2-3 years, the revenue building vis-a-vis the orders that we are getting, do you think in next 2 years it is possible for us to, reach an closing order book position of 780-800 billion? And you can tell us on the conservative estimate of QRSAM. I know it's too early, premature to understand what value will come for QRSAM next year. But, fair conservative assessment, do you think in March 26 you can be 800 billion order book? That's my final question, sir. Thank you.
Today we are in 650 billion, 65,000 crores there. And as we have told, we are planning for a growth of around 15%, 17% this year and maybe around same 15% in the coming years. And much will depend on the 700 billion or 800 billion, much will depend on any last ticket orders coming. In the normal course of orders coming, the order range is likely to be in this range only. If any last ticket order comes, then definitely that could make a slight jump in the order position. It materializes before that time.
Okay. Thank you, sir, and good luck.
Thank you.
Thank you. Our next question is from the line of Mr. Ankur from HDFC Life. Please go ahead with the question.
Hi, sir. Good morning. Thanks for your time as always. And just continuing with Amit's question, when I look at our order book between 20 to 23, so we were around 52,000 crores in 20, went up to about 60 odd thousand in 23. This year also, assuming we do 20,000 crores of orders, similar revenues, we'll probably be flat, right, in terms of the order book on a YOY basis around that 60,000 crore number. Plus, even the orders we get this year, for example, the fuses is more like a 10-year order. The Akash is more like a 4-5-year order. So, I'm just struggling to understand, how do we really, with our order books kind of flattening out, top line obviously between 20 to 23, when he went up from 12 to now we're at 20,000 crore top line. So, with no growth in order book, I'm just struggling. How do we kind of get that confidence of 15% growth?
No, growth will be there. See, this year we are projecting an order inflow of around 20,000 crore. Definitely next year it will be more because many platforms are coming. P75I, the P76 programs are coming where we have indigenous content, where we are buyer nominated equipments we are having. And with country's Atmanirbhar program, any big platform government is working on that, there will be electronic equipment, and we have got a very good opportunity to chip in that. So it will continue. Government defense spending will increase. Our order book definitely it will not be flattening at 20,000 crore per year. We are projecting 20,000 crore plus this year. Definitely with QRSAM coming and maintenance order coming, it will be much more in the next financial year than what we are projecting in this financial year. With the QRSAM, what value is there in the market, or what you say them in public domain? Definitely with QRSAM fructifying, our order inflow is much more than what you see in this financial year.
No, fair. Okay, but let's assume even if you get that 12,000-15,000 crore order for a QRSAM, maybe your order inflows go to about 30,000 odd for 25. But anyways, I'll take this offline, because your base, the revenue base itself has become so big, right? At 20,000 crores plus, you need a couple of these larger orders to come through. And I guess, even execution for these would be spread over 5-7 years, right? But anyway,
we are talking of the order book, though we are talking of this QRSAM and other bigger orders, there are also very large chunk of smaller orders which keep coming, which have a shorter execution time. So what you are telling QRSAM, it will get executed in 3-4 years, and so your revenue, definitely revenue will be spread for QRSAM and other large orders in 3-4 years. But there are many other small orders which also constitute more than 50% of the orders inflow, which are having only a cycle time of only 1 or 2 years of delivery. So it's a mix of both. That is point one. Point number two, regarding your our order book growth, I think we hope to continue to maintain a 2.5 to 3 years of order revenue 2.5 to 3 years even in the coming years. Around 2.5 to 3 years will be in the pipeline as order book is concerned. This is what we expect to maintain at the end of March 24-25. It continues to be like.
Okay.
Because it's a mix of orders. Both we are only talking of QRSAM, but there has we again and again tell for any shipbuilding we have got our share of orders. Any HAL submarines we get orders, HAL aircraft we get orders. So with all this, it's a combination. And of course there are spares, services, maintenance, all with a combination of all this. It's a mix. Those two large orders we talk, many small orders also make the same number.
Our next question is from the line of Renu Baid from IIFL Securities. Please go ahead with your question.
Yeah, good morning and thank you for the opportunity, sir. My first question is, can you update on what was the mix of exports during the current quarter?
Current quarter, the exports was around 87 crores in numbers. Of course, it's about $10 million we can take it roughly.
Sure. Secondly,
87 crores approximately.
Sure. Secondly, can you also share some update on the large projects which we are executing, LRSAM, completion of IACCS project and Akash missiles? Where are we in terms of the execution timeline, as in execution in terms of percentage of the order which has been completed? And update on the level of indigenization which we have broadly achieved or which we are targeting to achieve this year for LRSAM, because we are expecting a higher share of localization to come through from fiscal 24 for this project.
We are right on track. If you see, as per customer shipbuilding program, and if you see plan for 2023, roughly around 3,000 crore of order execution will come from 23-24 this financial year. Localization or indigenization continues. Overall will be around but it's all, there are various subsystems of LRSAM. So some portion there will be a higher level of indigenization, some there will be less, but in the range what we committed in the contract, we are meeting.
So on IACCS and Akash?
ISCCS also we are right on the track, because most of the delivery portion it has been completed. Now it's going through that installation, commissioning, overground nodes which are already operational. AMC is coming. So this is what you can say that major supplies and deliveries have been completed. Out of 8,000 crores of the contract value in ISCCS, the pending order as on date is only 2,000 crores, which will be executed over a period of time.
Okay. And Akash?
Akash missile systems, the pending order is very less. We got a order of 5,300 crores. It's almost, it will be getting completed in the current year.
Got it. Sure. And lastly, can you share some updates on the developmental projects which you're working with DRDO for drones? By when do we expect the project to be broadly there and developmental or commercial orders coming to us? Any timelines of progress? The drone project for which we are working with DRDO?
Okay. Yes. This is under trial, and it is not fair from my side to comment at this because the trial is led by DRDO, and we are developmental partner along with HL. So it's better that their specific details are shared by DRDO.
Sure, but if we look from a 2 to 4 year perspective, what could be the size of these orders that could come commercially to us in that space? But overall, for combined.
Yeah, at this point of time, it is premature to tell because government is already working with the USA for the MQ-9B program, which is high altitude, long range that platforms. Then these will be medium altitude and long range that equipment. So let us see what mix defense services they want for this product. So value and all will be known only when we know the strategic plan or that of services.
Done. But largely we are into the male category and not the hail category so far.
As of now, yes.
Got it. Yeah. Thanks much and all the best, sir.
Okay. Thank you.
Thank you. Our next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Hello everyone and thank you for the opportunity. My first question was on gross margins, which for this quarter have been higher than the 40 to 42% range that you've guided for the full year. I wanted to check whether the stance on the full year guidance has in any manner changed, and if not, so is it more linked to this quarter having a higher EV and VVPAT kind of contribution that gross margins are higher?
No, we would not like to comment on whether it's an EVM, VVPAT or what, but overall the guidance remains same, that 40 to 42% gross margin for the current year and EBITDA of 21 to 23%. It's only the composition of various orders which have been executed in the first quarter which has given a higher margin. And going ahead, during the year we expect to maintain the guidance which has been given earlier.
Understood. Now the second question that I had was more on the aspect of indigenization. Now, from your last con call, I understand that it may more be a volume impact rather than a margin impact. Wanted to check with you how to kind of think through the growth impact and volumes that can happen for you over time. For instance, when you're planning your next 2-3 years of capex, how much proportion of that may be going towards products that will get indigenized over time? Just some sense from the growth perspective would be useful over here. Thank you.
I think you are talking of capex. Capex, as we told, we are going to keep it around, it will be around 700 to 800 crores. Indigenization is linked to more the R&D expenditure, what you are talking of. Like, capex is linked to more infrastructure building, whereas we are told for capex for indigenization. So there's a capex of 800 crores, 700 to 800, which are expecting to incur in the current year. And R&D expenditure will continue to be around 6% to 6 to 7% in the current year of the revenues. So R&D expenditure will lead to the indigenization, which will continue to give us the benefits in the coming years.
So could this be a meaningful growth boost on an annual basis for you next 3-4 years? If you could give us some more color.
Growth in terms of revenues you are talking?
Absolutely, sir. Yeah.
Revenues we have already told, we are giving a guidance of 17%. We have an order book of 65,000 crores. And in the coming years also, we expect to maintain this order intake position, and it may further improve with large ticket orders. With indigenization, we hope to continue to maintain the margins of what we have guided for earlier.
Sure. So just a last question from my side. The other income boost you kind of clarified for the quarter. So would it be fair to kind of annualize the 1Q number for now?
Other income for the current full year?
Yeah.
Full year, I am not able to tell you at this point what will be the full year number. Current quarter, yes, we had some interest income increase. So over the time, I mean, we'll not be able to tell you exactly what will be the figure for the full year as a whole.
Got that. Those are my questions. Thanks a lot for your response.
Thank you. Our next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good morning, sir. My question is on the fuse complex, the Nagpur fuse complex which we are setting up. If you can talk about the timelines and the capacities, what will be the capacities per year after this expansion? What is it currently?
Fuse complex, already first phase we have done, that is building the boundary and leveling and all these things. Now we are going for building construction, so tender and all are going. So another 2 years it should come. So it will address long-term fuse contract requirement and any additional fuse business which will be there apart from this long-term.
I'm sorry, what will be the capacities like? Will it be like 2 lakh, 5 lakh fuses per year after this capacity?
We cannot specify that exact capacity because capacity depends upon whether you can work in 2 shifts, 3 shifts, 1 shift, depending upon how much.
Those are one thing. It also it depends on the requirement of the customer in that year. So if they require that much number, so we have to work on only that many numbers only. It is that way also. It's not that we can produce maximum in 1 year and try to deliver. It's a delivery period is also stated. So we'll have to go in accordance with the delivery schedule also.
No, sir, that is understood. But we have talked about we are increasing from say 100 crore a year to 500 crore a year. So will that capacity be enough in 1 shift, 2 shifts, or 3 shifts at that new Nagpur facility?
What we have envisaged is that the way we are building complex, there will be other products also which can be built, which are byproduct are related with a similar type of item like fuse. So, and then construction, hangers and all will be built based on current requirement, which can be scaled up further if requirement increases.
But sir, for next 2 years, how will we supply the extra requirements which we now have compared to what we used to supply?
We have enough capacity to meet current requirement of the customer in our Pune unit. There also we have added lines for fuse and we will be able to meet current requirement. Once this comes up, we will shift that operations to Nagpur because Pune unit we are making many other products also. So our objective is to, once it comes up, start manufacturing here and utilize that space and this for other products in our Pune unit.
What is the amount we are spending on this Nagpur facility, sir?
Nagpur around
overall it's around 200 plus crores.
Over the 2 years combined?
Yeah.
Okay. And sir, you also talked about that PNC was...
Land and compound wall is already spent. So another maybe 100 crores could come up in the coming this year and next year.
Okay, sure, sir. Last time you talked about the PNC...
Mr. Aman, may we request you to rejoin the question queue for follow-up questions?
I had only one question. Just let me complete the second question and then I'll come back in the queue, if that's okay.
Please go ahead.
Yeah. So my second and final question is, last time you talked about that PNC was almost over and we had one small issue which needs to be resolved and it will be resolved in the next 1 month related to fuse. So is that issue
related to
fuse only? The trial may...
The topic of fuse order now. Okay.
Yeah.
Fuse order,
There is no issue now. This order is in pipeline. It is under process in MOD and it should come. There is no issue. As of now, there is no issue in fuel business.
Sorry, when should it come, sir?
It's only MOD knows.
No, in the if you are inside information, if you are in the beginning, we are told that it is. I mean, they're asking 1 month, 2 months. We told maximum today at this point of time. Our anticipation is maximum it should come within 6 months.
From today.
From today, it is our anticipation today. Okay.
Sure, sir. Thank you for the answer.
Thank you. Our next question is from the line of Amit Anwani from Prabhudas Lilladher. Please go ahead.
Hi, sir. Thanks for taking my question. My question pertains to export. I think you highlighted that this year we are targeting $90 million export. So I think that roughly comes about 3 to 4% of the guidance which we are giving for the full year. Just wanted to understand, earlier we used to talk about, raising exports to some 10% odd. So what are our targets for upcoming years on export, and what exactly we are exporting, which geographies we are exporting, if you could highlight that, and are we targeting any non-defense export also? That is my first question.
You see, currently we have an order for TR modules from LS France, some electro-optics equipment from Israel. We are also giving to Airbus Japan, something to LRSAM also. So these are equipments which are part of where we are manufacturing them, some of the items and supplying them. Apart from that, we have supplied to Maldives also. We have AMC for Maldives. We are also working with some companies in USA for manufacturing their products in India. Friendly countries we are offering like Vietnam also, and our teams are visiting. They have visited in Nigeria, Brazil. So we are exploring. Government is actively encouraging. So we will be able to scale up, but export business in defense, it takes time. We are on track, but more visibility comes with passage of time.
So any target in next 3-4 years?
Reaching 10% will take quite some time. It is not so that we'll be able to reach immediately. It's only a long way ahead. I can tell as far as export is concerned. Overall revenue growth we are maintaining at 17%, but exports as becoming 10% of the revenues, it will take some more time. It will take quite some time.
Right, sir. And for one JV which we used to talk about with Triton for a battery for I think MHCV or some for buses. So I think that was about 8,000 crore order. Any update on that?
There was no JV. We signed an MOU and then we were supposed to give one set of battery. We have already supplied to Triton. Triton is evaluating that. Let them come back and then based on their business opportunities, we will see that what can be done. Because we have to see what is the business opportunity.
As we had indicated earlier, we are not factored much of that order book from that. Whatever comes out, we have not factored in any of our this one because we do not know. Still, it is under evaluation and they need to come back and with exact more quantity and values what they want. So presently, we have not factored that particular order in our order book.
Sorry to interrupt, Mr. Amit Anwani. May we request you to rejoin the question queue for follow-up questions. Ladies and gentlemen, in the interest of time and fairness to all participants, may we request you to limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Vijay Goyal from ICICI Securities. Please go ahead with your question, sir.
Yes, sir. I have a couple of questions. The first is on Uttam AESA radars. So can you highlight what's the status of these radars? Because we understand that these radars will be installed on Tejas NK1A or upgraded Sukhois. And since Tejas NK1 deliveries will start from this year and
So just wanted to understand, by when, we are expecting the orders for Uttam radar, and what could be the size of this order?
Uttam, I think there are two players in that, one private player and we are there. So we are working on, at this time, I would not like to dwell on much detail. Once we move ahead and some visibility is there, we'll let you know.
Sure. And sir, regarding this order book of 65,356 crores, out of this, how much it is for non-defense?
1 minute, just please. Non-defense constitutes around 6% as of now.
Okay. And what's the average execution period of this in non-defense part?
Non-defense, normally we are able to execute in 1 or 2 years. 2 years. Non-defense orders, they don't go beyond that.
Understood. Okay, sir. Thank you.
Thank you. Our next question is from the line of Praveen from Ratnabali. Please go ahead.
Thank you, sir, for the opportunity. I have two questions. First of all, I would like you to help us understanding the AEW and AWACS opportunity.
Not clear. Your voice is not clear.
Sir, am I audible right now?
Yes, sir. Please go ahead.
So, I'm asking about the AEW and AWACS opportunity, as there is a significant gap between India and its adversaries. The government has been planning for upgrading the AEW and AWACS program. But then around 6,000 crores of a program which is still pending for, I think, 5-6 platform based on A330 aircraft. So I just want to understand what is the status, and if I consider per aircraft 1,000 crores orders, then what is our contribution?
See, our team, this is in preliminary discussions, and there are other players also involved. So our team also is working on that. So since other players are also involved, I would not like to give comments on this.
Okay. So my next question is, if you can break it up, your current order book of around 65,000 crores into defense, and in defense, how much is the EW? And what is the portion of the space?
Defense is there 90%. EW.
See, if you see around 6% is non-defense, and if EW segments is around 15,000 crores.
And what about space, sir?
Space we have not specified separately.
So is the scenario of space orders is well intact? Like, are they coming? Because we have been hearing like there is some upgradation. The changes is happening from ISRO point of view, and that is why the order inflow is not coming.
So ISRO, our order from ISRO is not very significant as of now, that we say that, which have any impact on this high value.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Amit Binde from Morgan Stanley. Please go ahead.
Hello, sir. Hello. Can you hear me? Hello.
Yes, sir. Please
go ahead. Sir, I wanted to understand what is the split of products and services in our order book, one, and within that, if you can also tell us how are we based on nomination-based contract, the share of nomination-based contract in the order book.
Order book as on today, the nomination base is around 95%.
Okay. And going forward as well, these new orders that we are expecting, most of them would be in the same category?
Most of them are nomination basis, but some orders we are winning on competitive tenders also, but value is not that.
Right. And how about the split of product and services?
Product and services is around 90-10.
90-10. Thanks. That was it. Those were my questions. Thanks.
Thank you. Going forward, we would request participants that we are restricting to one question per participant. Thank you. Our next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity again. I have my question is actually around Tejas program. So Tejas Mark 1A, AMCA Mark 2, etc. Now this goes beyond your range that you have mentioned. So just wanted to understand what kind of value of production we can expect from these programs, our share. Just a ballpark number would do, sir, at this stage.
Tejas, we supply avionics package Mark A1, but exact value at this point of time I do not have with me.
No, sir, I was asking more on the potential, Mark 1A, Mark 2, AMCA, where, the requirement would be.
As of now, I don't have that exact value because there are thousands of products where quotations are submitted. So offhand, I don't have. I can share it later.
Okay, so that's helpful. Thanks and all the best.
Thank you. Our next question is from the line of Amit Mahawar from UBS. Please go ahead, sir.
Yeah, sir. Thank you again. Just two quick questions. In the fuse manufacturing facility, will we do the course correction fuses also?
Which one?
I'm saying in the fuse manufacturing facility, will we also do the course correction fuses?
In fuses? Yeah, I'm not able to understand your question. Please elaborate.
I'm saying in the new facility, will we also do manufacturing of course correction fuses, which basically enhance the capability of the equipment itself, on which we use the fuse?
I do not have that detail, but yes, any products related with fuses and this line of business, we will be able to do it now.
Sure. And thank you. And second and last is, to your response to Jonas's question on provisions, will that in any way impact FY24, EBITDA margins guidance that you've given, or there is no major impact?
No, we expect to maintain the guidance given, 21 to 23% EBITDA.
Great. Thank you, sir, and good luck.
Thank you. Our next question is from the line of Aman Vij from Astute Investment Management. Please go ahead, sir.
Yeah, thank you for the opportunity again, sir. My question is regarding our recent tie-up with the HFCL. And you have earlier alluded that currently the requirement for indigenization of fuses is like 20%, which we have to take to maybe 50-60% over the years. And I believe they are also into the same category. So will they be a contract manufacturer for us? Can we take the supplies for them to help in indigenization? Your thoughts regarding that, JD, as well as specific to this fuse portion, which I believe is common between the two companies.
See, HFCL, we have just entered into MOU, not JV. So we are working on area of common interest, and detail will be known later on.
And on the common portion of fuses, sir, you both have the same products. So
let us go into detail. As of now, it's a broad MOU. So we'll work together, and once things are finalized, we'll let you know.
Okay, thank you. Thanks.
We can take the last question, please, sir.
That was the last question of our question and answer session. I now hand the conference over to Mr. Harshit Kapadia for closing comments.
Yeah, thank you. We would like to thank Mr. Bhanu Prakash Srivastava, Chairman and Managing Director, Shri Damodar Bhatta, Director Finance and CFO, Srinivas Sir, Company Secretary, for giving us an opportunity to host this call. We would like to thank all investors and analysts for joining for this. Any closing remarks, sir?
No, thank you very much.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.